This episode is brought to you by Bus Vacation Rentals, a premier property management company in Houston and Galveston areas. Bus Vacation Rentals specializes in managing short-term rentals the right way. Give Bus a call today at 281-549-8432 to learn more, or check out the website at www.buzzvacationrentals.com. Now, back to the Real Estate Ballers Show. Hey, welcome to another episode of the Real Estate Ballers Show. If you're new here, my name is V. Lee. This is the show where I interview upcomers, doers, and ballers of the real estate investing world. The purpose is to help you to reach your financial freedom in real estate investing faster. Last week, Adam and I had a conversation with Joni Wolfswinkel, and we're so appreciative of Joni for coming on to the show and share her knowledge with us. The one questions that Adam and I want to dive in a little bit deeper in today is the questions of, hey, market value has been going up for the past 2 years, and now we hit with this interest rate hike. So should I still buy and hold? So stay tuned for our positions on this question. Hey, Adam.
Hey, V.
What's going on?
I'm just excited to be doing this podcast today.
Yeah, me too. Just signed a new lease. We typically sign like 2 years lease or more. And this time our tenants were able to buy a house. So they didn't renew the lease. And we put it up, before they move out. They moving out end of May. So this show is pre-recorded. So we already got a new lease signed. So, couldn't be happier. No vacancy.
Congratulations.
Well,
I've got a tenant who wants to do a 2-year lease on their next round, and I'm wrestling with whether I want to do the 2-year lease or not.
I have learned from an investor when I first started holding property about leases and how long of a term I should sign. And I've always just started out at a minimum of 2 years lease. That's our requirement, because what's the most expensive cost when the tenants move out?
You have the vacancy and you have the turnover cost.
Right. So vacancy and turnover. It takes 2 years to recoup, at least for the turnover, like paint, right? Mm-hmm. You have a bad tenant, when they move out, you got to do at least paint. So for us, we've always done a 2 years lease, and then as the lease is approaching the expiration date, we would send an offer. We'll say, if you want to sign another 2-year lease, this is your new lease, monthly lease rent price. If you want to switch to month to month, then this is your lease price. And that's how we have been able to extend the lease all the time. We would throw in things like, we'll replace a toilet, or we'll put in something, if you want to sign another 2 years lease, because it's always cheaper than, them moving out, us having to go in, at least have 1 month of vacancy, and then having to repaint the property.
So you think me doing 1-day leases and having to renew my lease every day, is that not a good plan?
Well, I think weekend leases can be really lucrative. Okay, so one of the topics that I think we should touch on is we had a guest previously that had 2 property management company in 2 markets, right? And so one of the questions that we asked was, in today's market, in the past 2 years, we had experienced a tremendous price increase, appreciations in real estate. And I think we probably reached the highest point ever. I don't know if it's still going to go up from here or not, but I think this is as high as it ever be. And now we certainly got that interest rate that is catching up as well. So I think her answer was the rent rate is catching up, so it's not affecting us investor who buy and hold too much. But I do want to elaborate on that a little bit. So what's your take on that subject?
Yeah, so the questions we asked her were more people going to be renting or not, and what was going to happen with rent rates compared to buyers, and so the interest rate has an effect. So just to going to the very basics, here's what happens. The Fed moves the interest rate, mm-hmm. and then the banks are a derivative of that. And so then all the banks move their interest rates.
Yeah.
And that includes the mortgage ones. And so when somebody's an end buyer and they want to get a loan, the banks look at it from a debt to income ratio. Mm-hmm. And so the higher the debt, then the less they can afford that they're allowed to get for a loan. And so when the interest rate goes up, then that means that they're going to have more debt. And so they can't buy as expensive of a house.
Right.
And so the people selling houses, if they want the largest number of buyers, are going to have to make a decision about whether to adjust the price down or just factor in that they have a smaller buyer pool. And so that's where we're going now, because we haven't had interest rates go up like this in some time. I'm a horrible prognosticator. I'm really bad at all these guesses about what's going to happen. I thought when COVID hit that it was going to be this huge buyer's market because everything was going to be all crazy, and it went the exact opposite. So I'm not a very good predictor, but I can at least share thoughts on what's the logic is of the interest rates. And at least we know what the Fed's going to do. They've been pretty clear about the next two steps. So everyone's sort of baking that into their plans.
And that is still to raise the interest rate again, right?
Right.
Yeah.
I'm assuming people are going to do refinances on their houses like crazy now before the rates go up.
That's probably true. Yeah. People actually go into a buying frenzy because they're afraid that interest is going to go up more. So they want to buy before the interest rate go up again.
Right. And so what happens is the appraisers are so busy running around with all these refis that they don't have time for us important investors who need them to do some appraisals for some other deals. So that's the problema. But in terms of the rentals, I think that the rental markets have now gone up. I think they said 10 or 11% year over year, which is one of the biggest jumps that we've seen. So I think it's just everything's going up. You buy eggs, you buy milk, you rent a place, you buy a place, prices are going up all over the place.
So does it still make sense to buy and hold?
Yeah, I think it's the same math concept. It's just new numbers. The tricky part with the buy and hold is it's harder to get comps on rentals in some markets like mine versus in just looking for comps for a house that has sold. But yeah, I think it sure does make sense to buy and hold. What do you think?
I think it still does. And like you know, we can go do research and analysis to come up with the exact numbers, right? But at the end of the day, sometime for me, I'm thinking through the logic here. And when interest rates go up, the people that can afford to buy houses less than $300,000 are the same people that would rent from us.
That's right.
So when price go up, it forced them to buy a less expensive house, and that pool of inventory is very competitive. So I think they still gonna have, some of them may go back to renting, and therefore could drive up the rent price.
I totally agree.
So that's just my 2 cents speculations, gut feel here.
I totally agree with everything you said, B.
So in today's market, prices go up, interest rate up, it still makes sense to buy and hold, because if you cash out in a few years, you still benefited from that price appreciation.
Yeah, that's right. And then, of course, some people are really looking at their tax consequences. And so that's a whole new discussion, how long you're holding the properties and whether you're living in them or not. And that goes really deep into it. But just in terms of the interest rates moving and how's that affecting the investment space, I think everyone should be looking long term and just do whatever they thought was the right thing for them to do to reach their goals. So if you're a buy and hold investor, keep being a buy and hold investor.
Are you kidding? I just spent a lot of money on buying some expensive real estate, so it better work.
What could possibly go wrong, B?
What could possibly go wrong, right?
Sure.
Okay. I think that's answered the questions of prices gone up, interest rate gone up. Should I still buy and hold? The answer to both of us is 100% yes. You should keep buy and hold.
Amen.
Thank you.
All right, B.
Thank you for watching the Real Estate Ballers Show. If you find value in this show, hit that like and subscribe button now. You can also give us a shout out on social media using the hashtag REBallers. Before you leave us a comment below. Let us know what's working for you, what's not working. See you next time.